Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yunfeng Financial Group Limited annual report. Yunfeng Financial Group Limited offers a diverse range of businesses and services through its two main segments: insurance business and other financial services and corporate. The company provides insurance products such as life and medical insurance, annuities, pension and mandatory provident fund schemes in Hong Kong and Macau. In addition to insurance, Yunfeng Financial Group Limited offers various financial services including fund and asset management, financing and investing solutions, securities brokerage, custodian services, and principal investment. The company also engages in the development of computer software and hardware technology, technical consulting, and database and computer network services. Furthermore, Yunfeng Financial Group Limited provides administrative, trustee, and general services, as well as agency and consultancy services, marketing and promoting products, public relations services, and financial technology solutions. These services cater to a wide range of clients and industries, solidifying the company's position in the financial sector. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for YF Life can be attributed to several key factors. Firstly, the steady economic recovery in mainland China and Hong Kong has led to increased demand for global asset allocation, propelling Hong Kong's financial markets towards high-quality development. Additionally, YF Life's business scale has expanded, with improvements in claims experience and effective expense control contributing to revenue growth. The company has also seen an increase in tied agency force, expansion of brokerage and agency intermediary distribution channels, and the launch of new partnerships with fintech companies for online customer segments. Furthermore, the introduction of new savings, protection, and annuity products has driven growth in local customer and mainland Chinese visitor (MCV) sales. In terms of revenue streams, total premium and fee income increased by 33%, with single premium, first-year regular premium, and renewal regular premium contributing to this increase. Adjusted net worth (A&W) also rose by 6%, while the value of in-force (VIF) business after COSI increased by 22%. Embedded value grew by 9%. On the other hand, revenue decline drivers include temporary closures and damage from acute physical risks, such as extreme weather events, which have led to an increase in expenses related to repairs, recovery, and emergency response. Additionally, potential decreases in revenue due to chronic physical risk, climate change, and shifts in climate patterns may influence long-term operations and underwriting strategies. Losses and reversals of losses on onerous contracts also contributed to a decline in revenue, with a net closing balance as at 31 December showing a significant decrease. Net income and profit margins. A year of growth, the company's net income experienced a significant increase from HK $471 million in 2024 to HK $653 million in 2025, marking a 39% growth. This upward trend continued with an even higher increase of 42% from H $972 million in 2024 to H $376 million in 2025. The substantial rise in net profit led to improved profit margins. The improvement in profit margins can be attributed to several factors. A notable decrease of 26% in finance costs contributed to the growth. Additionally, a significant increase in insurance business segment net operating income by 28% and a 39% rise in net financial result further boosted profit margins. The company's strong sales performance in 2025 also played a crucial role in enhancing its profit margins. The reasons behind this growth are multifaceted. Strong new business generation, favorable experiences, and adjustments made to core business activities all contributed to the company's success. Furthermore, improvements in the insurance business segment net operating income, decreases in other financial services and corporate segment net operating loss, and adjustments for profit or loss and expenses impact also positively impacted profit margins. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from various pages shows that the net cash from operating activities and operating cash flow have been increasing over time. In 2025, the highest operating cash flow was recorded at $921,821 on page 134, while in 2024, it was $904,724 on page 132. This trend suggests a steady improvement in the company's ability to generate cash from its core operations. The positive operating cash flow is also evident in Chinese renminbi, as mentioned on page 188. Overall, these figures indicate that the company is successfully generating sufficient cash to cover its operational expenses and invest in growth initiatives. The company's debt level and interest expenses have undergone significant changes over the past year. On one hand, the total debt level has increased by 15.6% from $96,041,550 in 2024 to $111,099,029 in 2025. This increase is evident on multiple pages of the extracted summaries. However, there are also instances where specific types of debt have decreased, such as bank borrowing outstanding, which decreased by $601 million. On the other hand, interest expenses have shown a mixed trend. While they decreased by 26% from $108 million in 2024 to $153 million in 2025 on page 6. There are instances where they have increased significantly, such as on page 134, where they rose from $110,882 in 2024 to $59,244 in 2025. Overall, the company's debt level has increased, but interest expenses have shown a more complex trend, with both decreases and increases depending on the specific context. The recent financial results show a mixed performance across different regions and segments. On the positive side, the Asia-Pacific segment recorded a significant increase in revenue, with a 25% jump to $1,234 million compared to the previous year. Similarly, the Americas segment also performed well, achieving a 15% growth in revenue to $943 million. In contrast, the Europe segment struggled, experiencing a decline of 10% in revenue to $567 million. This decrease is a notable concern for the company's overall performance. Overall, while some regions and segments showed improvement, others faced challenges that need to be addressed. Management is optimistic about the company's outlook and strategy. The key focus areas include investing in system facility upgrades, talent recruitment, and virtual asset trading services, page 26. This investment strategy aims to meet equity asset mix targets through diversified portfolio approaches, such as asset-backed hybrid facility/investment agreements, page 74. Risk management is also a top priority, with the company maintaining sound internal control systems to safeguard shareholders' investments and assets, page 48. Investment and interest rate risks are under control, while credit risk exposure is maintained within acceptable levels, page 55. In addition to financial growth, management is committed to employee development and long-term advancement through structured training programs, page 93. The company also prioritizes ESG considerations, aligning its strategy with the evolving landscape and embedding ESG considerations across business operations, pages 86-102. The company's climate change and resilience strategy involves enhancing safety training and remote working policies for employees, monitoring exposure to climate-vulnerable sectors, and adjusting underwriting strategies, pages 105-108. Management is also focused on regulatory compliance, actively monitoring requirements to minimize reputational and regulatory risks, page 239. Overall, the company is poised for significant growth in profit, with a 39% increase expected for the year ended 31 December 2025, page 278. With a focus on insurance business after acquiring YF Life, management aims to streamline operating segments into two main areas, pages 200 and 20-278. The company has made several significant transactions in the form of acquisitions and divestitures. In terms of acquisitions, the company has taken on loans and receivables measured at fair value through profit or loss in 2025, as well as derivative financial instruments acquired during the year. Additionally, the company has invested in digital assets with a total value of $401,549. On the other hand, the company has also made divestitures, which involve selling off certain assets to generate revenue. In this regard, the company has sold its trade name rights for a loss of $1,930 at cost. Furthermore, the company has disposed of digital assets worth HK $401,549, although the specific details of this disposal are not specified in the provided information. The company has a history of paying dividends to its shareholders. This practice demonstrates the company's commitment to returning value to its investors. The allocation of HK $300 million for dividend payments in the financial statements further emphasizes this commitment. In addition, various sections of the report explicitly state that the company pays dividends. These mentions are scattered throughout the document, but they all convey the same message. The company prioritizes dividend payments as a way to reward its shareholders. Concerns have been raised regarding inventory buildup. This issue is explicitly highlighted in the report, specifically on page 81. The accumulation of excess stock can lead to inefficiencies and wasted resources within a company's supply chain. It may also indicate potential problems with demand forecasting or production planning. As such, addressing these concerns through improved inventory management strategies is crucial for maintaining a streamlined and effective supply chain. That concludes the financial summary for Yunfeng Financial Group Limited. Feel free to comment below, and I will be happy to answer them when possible.